trading hour, and we'll get our market conversation going in just a bit. Before we do that, let's just revisit that big global positive cue that our market is actually not reading into too much. Two sets of cues, actually. One from the US, one from China. So I'll quickly run you through what happened. Of course, there's a lot of chat on the non-farm payrolls report that we've had already. But just to sum it up, the US jobs report was actually market positive as it came out on Friday because there was an element of softness in it. Why do I say softness? Two reasons. Because the unemployment rate is at the highest in almost a year and a half in the US. It came in at 3.8%, also ahead of estimates. The second thing is that the average hourly earnings, that's an important metric that a lot of economists and market watchers track, that was below estimates. So the rise was just 0.2% month on month, 4.3% year on year. That was below estimates. The positive part of the report was that the actual job addition number of jobs added, that was above estimates at 187,000. But net, the report is seen as mildly positive for the market because it's a little negative. And the expectation is that we will not see another rate hike in the next meeting, which is in September itself from the US Fed. That's the US. Now let's come to China and the important developments over there. Now, a raft of measures have been coming through in the last 1 or 2 weeks. The most important development which has triggered the rally in the Hong Kong market today is the fact that another large Chinese property developer got a bit of a lifeline in terms of a bond repayment that was coming up. This is Country Garden. That's the name of the company. It's a very large operator in the Chinese property sector. Now, it had a bond, onshore bond, worth almost $530 million, which was maturing, and there were payments due, but it's managed to get an extension from its creditors. So that's being seen as a sign of relief and some respite for the time being. Not just this, more measures on interest rates. The PBOC on Friday cut the forex reserve requirement ratio by a massive 200 basis points. This is an attempt to shore up the yuan. The yuan has been under pressure as dollars have been leaving China. Investors have been getting out. So yuan's under pressure. But this comes in as a measure that boosts the yuan. So again, it induces confidence. And then there are a lot of deposit rate cuts that are coming in from large Chinese banks like ICBC. The rate cuts that we saw announced on Friday itself and running into Monday range anywhere between 10 to 25 basis points. And a lot of people say the rate cuts on the deposit side are a precursor to bigger rate cuts on the lending side, particularly when it comes to home mortgages. Not just this, for home mortgages, because that's the sector which is in the eye of the storm and the regulators and the government wants to shore it up. Now, there are lots of incentives for home buyers. For instance, the down payment, the minimum down payment that you need to make, there's a cut over there as well for first-time home buyers, second-time home buyers. So if you want to buy your first home or second home in China, basically you have to put down lesser down payment. So a lot of these measures seem to be working their way through the system, and the market for the timing is becoming a little more confident about how these measures are acting up. Reason why we're seeing this, of course, big surge in the Chinese stock market, in the Hong Kong markets, and of course in metals, as you pointed out, Reema.
Yeah, and even the recent